Hey everyone, it's Julie here with Tip Ranks. Today we're taking a look at 5 strong buy dividend stocks for October. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. September has flown by and that means it's time to take a look at dividend stocks for October. All of the stocks we're looking at today have an ex-dividend date in the coming month. That is the date you must own a stock before in order to be eligible for that next dividend payment. And with them coming up soon, it means you're not going to have to wait long to collect that passive dividend income. We're going to take a look at each of these companies, what kind of dividend they pay, and of course, what analysts are predicting for the stock's future. We found these using TipRank's dividend calendar, which you can find either under the dividend menu or under tools under calendars. Here you can go week by week and day by day to see which companies have upcoming ex-dividends and sort by a few filters. We included a strong buy consensus trading on the major exchanges. Check out the dividend calendar for yourself on the TipRanks website or right on the TipRanks mobile app, which you can download using the links in the description below. If you enjoyed today's video, make sure you hit that thumbs up button and that you're subscribed to the channel. Now let's dive right into our strong buy October dividend stocks. We are kicking things off with Dividend Royalty, taking a look at Sysco. Trading under the ticker SYY, they're currently priced at $82 per share. They've gained 5% overall in the past year, and in the last 3 months have climbed 5.8%. This food distribution company is considered a dividend king, as they have been paying and increasing their dividend since 1970. Their current quarterly dividend is 54 cents per share for a yield of 2.53%. They have the nearest ex-dividend date of the bunch today of October 3rd for payment on October 24th. Their most recent quarterly report came out on July 29th, where they saw both an earnings and revenue beat. Earnings per share of $1.48 beat expectations by 9 cents per share, while revenue of $21.1 billion beat by over $100 million. They saw some significant achievements in their Sigma segment and international segment performance and launched several growth initiatives, including an AI-empowered CRM tool and Perks 2.0. And with 9 current analyst ratings, the Sysco stock comes in as a strong buy with 7 buys and 2 holds. The average price target is just shy of $87 per share for an upside potential of 5.8%. Looking at those ratings down below, they range from a slight downside here to a high-end upside of over 13%. Next up, we're taking a look at AT&T. They trade under the ticker T, currently priced above $28 per share. Their stock has climbed nearly 27% over the past year, but in the last 3 months have cooled off slightly, down 2.8%. This telecommunications company used to be considered a dividend aristocrat, but as part of their spin-off of Warner Brothers back in 2022, they did lose that status. Their current quarterly dividend comes in at about 28 cents per share for a dividend yield of 3.95%. Their ex-dividend date is October 10th for payment on November 3rd. Their most recent earnings report was on July 23rd, and we saw another earnings and revenue beat plus record cash flow. Earnings per share of 54 cents came in 1 cent ahead of expectations, while revenue of $30.85 billion beat by $370 million. They added over 400,000 postpaid phone customers and saw their fiber subscribers increase as well, and with that did provide some positive financial guidance. The AT&T stock has 19 current analyst ratings, coming in as a strong buy with 15 buys and 4 holds. Their average price target of $31.49 implies an upside potential of 11.5%. Looking at those recent price targets down below, once again we have a low end with a slight downside here on this whole rating, where our high-end price target has upside of about 17%. For our third stock, we're moving over to the financial industry with Dime Community Bank shares. Trading under the ticker DCOM, priced at $29.49, their stock has gained about 8.5% overall the past year, and the last 3 months has gained 7.7%. While they haven't been increasing their dividend every single year, Dime Community Bank has been paying a dividend consistently for about 20 years, and their current quarterly dividend sits at 25 cents per share for a dividend yield of 3.35%. Their ex-dividend date is October 17th for payment on October 24th. And guess what, guys? Another earnings and revenue beat when they shared their Q2 report on July 24th. with earnings per share of 64 cents coming in 2 cents ahead of estimates and revenue of $109.7 million, beating by $3.2 million. They saw an increase in their core earnings power, a growth in core deposits, and expansions in their business loans. Dime Community Bank does just have 4 current analysts, but comes in as a unanimous strong buy. And the average price target of $34 implies an upside potential of over 15%. Looking at those ratings down below, just a couple of them have price targets at 8.5% to 22% upside. For our 4th dividend stock, we're looking at CVS Health. They trade under the ticker CVS, currently priced just shy of $75 per share. They've gained over 22% in the past year, and in the last 3 months are up 8.6%. CVS has a solid track record of dividend payments dating back to 1997, and they did have a lot of consistent increases, but paused those increases between 2018 and 2021 as they focused on paying down debt after a big acquisition. Their current quarterly dividend is 66.5 cents per share for a dividend yield of 3.5%. Their ex-dividend date is October 23rd for payment on November 3rd. They shared their Q2 earnings report on July 31st, and once again, another earnings and revenue beat. Earnings per share of $1.81 beat expectations by 35 cents per share, while revenue of $98.9 billion beat by $4.3 billion. That was an 8% increase from the prior year. They also saw an improvement in healthcare benefits. Their pharmacy and consumer wellness segment performed strong, and with that, they increased their earnings per share guidance for the year. The CVS stock has 18 current analyst ratings and almost comes in as a unanimous strong buy with 17 buys and 1 hold. The average price target is $83.81 for an upside potential of 12%. And looking at those recent price targets down below, they range from a slight upside at 0.4% all the way up to over 19%. If you've made it all the way to our 5th stock today, then this is a reminder to make sure you've hit that thumbs up button. Last on the list, we're taking a look at NiSource. They trade under the ticker NI, currently priced at $43 per share. They've gained 24% this past year and have climbed 7.8% in the last 3 months. This energy holding company has been paying a consistent dividend for 29 years and increasing it for 13 consecutive years, with a current quarterly dividend of 28 cents per share for a dividend yield of 2.56%. Their ex-dividend date is right at the end of the month on October 31st for a payment on November 20th. They shared their Q2 earnings report on August 6th, and it would just feel wrong to shake things up now. So yes, we have yet another earnings and revenue beat. Earnings per share of 22 cents beat expectations by 2 cents per share, while revenue of $1.28 billion beat by $69 million. During the quarter, they saw AI and operational excellence with some different deployments of AI capabilities, some successful regulatory approvals, and some infrastructure and growth initiatives take place. With 9 current analyst ratings, the NiSource stock is rated a strong buy based on 7 buy ratings and 2 holds, with an average price target of $45, implying an upside potential just shy of 5%. Looking at those ratings down below, they range from an upside of 2.2% to an upside of 9.2%. So that is a super quick look at 5 strong buy stocks, all with ex-dividend dates in the month of October. Let me know your thoughts of these companies in the comments down below and what other dividend stocks are on your radar lately. I always appreciate hearing from you guys. Please keep in mind these videos are never a suggestion to buy or sell any specific stock, so make sure you're always doing your own research and due diligence. Thank you guys so much for watching. Have a fantastic day, and I'll see you back here next time.